and welcome to the D91 Labs Idea Series. The D91 Labs Idea Series was born from the realization that the goal of financial inclusion is shared by many, but the efforts towards it are siloed. We wanted to create a platform where we can highlight a diverse range of ideas and innovations that aim to move the needle further on financial inclusion. In this idea series, we hope to bring to you researchers, founders, and practitioners in fintech who share our passion for improving the financial lives of the people of India with thoughtful and innovative solutions. Our hope is that these interviews and stories will inspire the industry to build and serve the underserved in India. I am Neeti Bhatt, a senior research fellow at D91 Labs, and I will be hosting the discussion today. Our first ever guest on the D91 Labs Idea Series is Kumar Shailabh. Kumar is a co-founder of Uplift Mutuals, and he'll be telling us a little bit more about that shortly. A unique initiative with the aim of providing health financing or insurance to those in need through a combination of mutualizing risk, that is, sharing the risk among those that are covered by the insurance, and reducing or minimizing risk by providing access to the right doctors, the right treatment at the right cost. Welcome, Kumar. We are so happy you could join us today.
Thank you, Neeti.
Great. So let's dive into the first question quickly. Can you tell me a little bit about the mutual model for health financing and the reasons why it is so crucial and appropriate for those in need?
Yeah. The mutual model of insurance actually is one of the oldest models in the world. It also existed in India before independence. And through some of the organization like Uplift, it still exists. So mutual insurance is very similar to what is known as cooperative insurance. People come together, they pool their risks, they run it exactly how an insurance company runs it. The difference being is that the risk is not transferred to an insurance company, the risk is retained. And the focus is on providing benefits to the members as opposed to profits. Profits are important, but benefiting the members. And let me tell you that about 28 to 30% of the world insurance market belongs to mutual and cooperative insurance. It is in India that we don't have a regulatory system for mutual or cooperative insurance yet. But yeah, that's what mutual insurance is.
Okay. Thanks for that. I think the next question that arises, there is already a product called microinsurance in the market, right, to solve for health financing issues for those that are underserved. Why do you think there's still a gap in its actual uptake? And do you think that the mutual model for insurance works to fix that gap?
I'll take you back a little, we have to understand that India is a land of grassroots movements. If you look at the microfinance movement also, today it is one of the most developed markets in the world for microfinance, but it started with grassroots movement of, self-help groups. The issue with microinsurance is that it came a little from above. So we were one of the first countries in the world to have regulations for microinsurance. And the regulators wanted, the commercial sector to introduce products that would penetrate the what is known as Bharat. And they did it rightly so because, we had very less penetration of insurance in India, leave alone health insurance. So in that context, microinsurance, the focus of microinsurance, bringing microinsurance to the masses, I think we are very early, primarily because financial inclusion per se is a difficult thing in India. The banks have started getting onto it in the last 10, 15 years. Insurance companies are getting onto it in the last 5, 6 years. So I think we are very early in the market. That is point number one. The second point is that for a country for the size of India, you cannot have standard product design across the country. Explaining insurance, explaining the fact that the sacrifice is immediate, the value is unknown for a product like insurance is very difficult when you are living on a $2 a day or $4 a day. kind of livelihood. So in that sense, micro insurance has got a push from the regulators, but it also needs a grounds up movement. And that's where mutuals come in, or a cooperative insurance comes in, because if you look at banking, there are almost 8 to 11 models of how lending and savings can be done. When you look at insurance, there are primarily two. You can either get it from the government or you can buy it from an insurance company. There is nothing else. In that sense, mutual or cooperative insurance is required as a primary form of insurance. I'm not sure it can become for the larger risks, mutuals and cooperatives will be a good fit. But if you have a primary level of insurance built, which is led by people, which is people centric, you can then bring the government and commercial insurance on top of it. So in that sense, while the idea of micro insurance has been extremely good, if you don't have grassroots movements, grounds up movement, and that's the issue we have seen in the last, because this is almost, I think the micro insurance regulations came in around 2004. So it's been almost 16 years that micro insurance has been around. And if you look at the penetration, it's the government schemes that actually have the penetration in India, which means that there is a lot of support required to build the market in the first place. The very fact that only government schemes have been able to scale, let's say 300 million, 400 million people covered in through Ayushman Bharat or the likes, says that we need to really invest in this market, build this market first. And that's where grassroots movement, a cooperative movement, a mutual movement like what we are doing makes a lot of sense.
Actually, that's a very interesting insight, because what you are essentially saying is that the implementation force of something like a micro insurance needs to come from bottom up and through a grassroots movement. And actually, that's a great segue into my next question, because I think we've understood the model and we now can talk a little bit about the distribution itself. I think intuitively, it's assumed that any distribution model for the underserved people has to be more hands-on, more localized. However, from the looks of it, the Uplift Mutual model seems to be built on a digital-first, high-touch approach, even though it's hyper-localized in its in the people that it's trying to serve. Is that assessment correct? And what would be the reasons for that?
It is correct if you look at the last 2-3 years that we have been working, but I would say that the Uplift model has been very data-driven since its inception in 2004. Digital, we decided to go in the last 3 to 4 years. Before that, it was extremely community-centric, extremely offline, because, as I said, we are very early in this sector. People ask me that we have been here around since 2004. For a product like insurance and a product like micro insurance, you're still very early, because you have to get a lot of things right. There is another way of scaling extremely fast, and that the startup world offers, and that's something that we have not tried yet. And happy if anybody does that. But what we felt was, building the community, as I said, a grassroots movement. We found that culturally, sociologically, that was far more relevant, because health is a very complex risk. It's very individualized, it's very community-based kind of risk. And just providing an insurance product is not going to work. You have to look at the access problems for healthcare in India. And especially if you're working in rural areas or tribal areas, that becomes a massive problem. It still is a problem in urban areas, because while there is accessibility, affordability becomes a problem. So if you look at the entire design of what Uplift is doing, we decided that, and this is something that we learned from the UPI thing that is happening in India. If the technology is simple, everybody will use it. So instead of designing offline products, we started looking at designing apps for people in this segment, because we thought that, delivery has to be the first mile delivery really has to be, very efficient. Only then people will trust if we really want to scale this forward. Because while the community creates that trust, it is extremely localized. Now, if we want to take this to a next level, we really need to ensure that we are efficient as well. So to give you an example, in the community model, which we still have, typically a claim would be settled in 30 days because the claims committee made of the members would meet once a month. Now, by design, it's a very superior design because that's the strong governance factor, which most of the financial products don't have. It's just a buyer-seller kind of design. Here, people are actually owners and they have a governance model. But that would take 30 days. Now, with the app, with the digitization of what we are doing, we can settle a claim in about 2 hours. So the idea is that while we retain the governance part of it, we also make it extremely efficient. And I think going forward, the idea of making it all digital, it's a learning curve for us. It's not something that we have fully understood or can stake claim to that, we know how to do this. We don't know. We are still learning. But what we surely have understood that everybody wants efficiency. The poor also want efficient products. And I think with that perspective in mind, that's where we are trying to be digital first. And we just launched a product for truck drivers, which is only available on the app. So that's a step in the direction that can we really take this to, communities or, households across India rather than just being limited to a geographical community.
Understood. So efficiency being the next target for you guys, in addition to strongly root your product and your app, as well as your service in community and trust, right? So that's actually really interesting. I think that brings me to my last question, and I think you've covered a little bit of it already. But what are your thoughts on the scalability of this model? What does the future look like to you for the mutual health insurance model? You can give me the best case scenario and the most probable one, maybe.
Scalability, we have realized in insurance is a function of whether you are able to access reinsurance or not. Unfortunately for us, because we are out of the regulatory system as of date, we cannot access reinsurance contracts. To be able to underwrite risks at scale, you really need a backup, which most of the insurance companies have through reinsurance. That is one of the limiting factors. And there is a talk about, giving permission for standalone health insurance companies, where mutual and cooperative companies may also be allowed, according to the paper, published by IIDA last year. Having said so, scalability is something that requires a lot of investment. If you look at the models that are being invested in, there are primarily two models. One is the government model, where government is the primary scaler of health insurance in India. I don't think we can compete with the government. Nobody can. And it is good that it is moving towards a universal health insurance kind of model. I think that model suits best for a country like India. For a mutual model to scale up, as I said, reinsurance is one. Second is investment in behavior change. And I think that's something that the sector per se in insurance, has been missing. If you see the kind of investments that go into, selling loan or savings products, you don't see that in insurance products. You very rarely see investments coming in insurance only for testing products. And testing products at scale. So I think these two things are one of the basic, things that will make it difficult for scaling this model. On the other hand, I am hopeful that, if we are able to get the right fit of the digital product of a mutual, and, everybody nowadays talks about communities. Earlier, it was not about communities. Everybody now is suddenly jumping on the bandwagon of build a community, build a community. Web3 is all about building communities. So I'm very hopeful that in the coming years, a model like a mutual, whether you call it a mutual model, a cooperative model, a P2P model, does not matter. But a model where the risk is owned by the people themselves, and a risk reduction program, that reduces risk, becomes a very strong part of this kind of model, is something that is inevitable. Whether you do it now or it may happen in 2 years, 3 years, it will happen. So scale will happen. I think as financial inclusion gets deepened in India, as mobiles become the first use tool for any financial product, I think mutuals have a great potential there. And I'm pretty aggressive about it, that's something that we should also latch on.
Great. And I think I agree. I think the idea that digital first becomes the next going step, P2P, and any kind of sharing of risk model or sharing of credit or payments or whatever.
We're seeing in DeFi also, right? Decentralized finance, the same thing is coming in. It's still very early days, but we are seeing that happening in finance. And when it happens to loans, it will happen to everything.
Eventually, it happens to the other financial products. Absolutely. Okay, that's great. I think that's last of my questions. Thanks, Kumar, for taking so much of your time and just giving us such an interesting peek into the product as well as the building of the product and how you're thinking about it in the future. I see that you've touched about 300,000 people across geographies with this model, and I do hope that the model is able to serve more people in the future. Take care and thanks again.
Thank you, Niti. Thanks.
Thank you.
Bye.